NIO has made incredible progress in 2024, with sales rising over 34% year to date. Now, in 2025, NIO has more exciting upcoming events, including the increase in production of its new brand, Onvo, which is accessible to more buyers. What's more, the Chinese market is one market where electric vehicle sales are actually increasing. People like electric vehicles in China. Outside of China, electric vehicle sales are stagnating and they're not growing by all that much. So NIO is in the right market at the right time. But for 2025, should investors buy NIO stock? I'm going to answer that question in this video, looking at the company's prospects and comparing it against its valuation to determine if investors should buy this stock at current prices.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one exciting thing about NIO in its November 2024 delivery update, which the company gave on December 1st, they sold 20,575 vehicles, and they highlight this as delivered. In other words, it's another proxy for sales. That was an increase of 29% from the same time last year. Overall, in 2024, they've sold 191,000 vehicles or delivered 191,000 vehicles, which is up by over 34% compared to the same time last year. So NIO is actually increasing electric vehicle sales in an industry that outside of China is having a lot of difficulty increasing sales. What's more, the company's Onvo brand, which they only launched around September, has already started off on a right foot, a little bit behind schedule, but 5,000 vehicles have been sold from the Onvo brand in November alone. That's expected to increase in the coming months. The company said production will ramp up and they will increase sales from the Onvo brand, which is a lower priced product accessible to more buyers. To add to the fire, the company is going to launch another brand called Firefly in 2025, which could increase sales that much more. All that being said, NIO stock price is down over 51% year to date in 2024. It hasn't been a good year for the company's stock price, even though it has been a good year for the company's sales. And the big reason for that is the company is still losing a lot of money on the bottom line. That being said, if you followed my recommendation, I made a similar video like this one at the end of last year, and I said, don't buy NIO stock just yet. Even though it's an exciting company, it's not yet ready for investors because of the losses on the bottom line, because it's still spending so much money trying to grow the business that it's not yet in a position where it's sustainable, where it's sustaining cash flows and profitability on the bottom line. So I told investors to just wait on this one. It's an exciting company. Just follow it, put it on your watch list, but don't buy just yet. This is what I said last year. And I updated this throughout the year, and I reminded investors that it still wasn't time to buy this stock. Hopefully you followed that recommendation and you didn't lose money on NIO stock yet. Now, I'm going to update this recommendation in this video. By the end of this video, I'll update this recommendation and let you know if I think now is finally the time to buy NIO stock. I mentioned that the primary reason the stock price is down by so much is because of the losses on the bottom line. And you can see the comparison here between revenue and the net income. Revenue has been growing nicely, up to $9 billion, or $8.8 billion to be more precise, up from less than $2 billion in 2020. So sales have almost more than quadrupled in the last 4 or 5 years. That's exciting, right? You would think the price would be up as a result of that. But the problem is that the company is losing so much money while increasing sales. And those losses are getting worse. Now, if the losses were improving, meaning that as sales are growing, they're still losing money, but the losses are shrinking and they're getting closer and closer and closer to profitability, that would have been much better. That would have likely caused the stock price to increase. But that's the opposite of what's happening at NIO. Revenue is growing, but it's leading to more losses on the bottom line. So the revenue that the company is generating from the money that they're spending is not effective. It's not efficient. They're spending too much money to generate that growth. And that's what has investors going away from NIO stock. And that's the primary reason I've had NIO stock not rated as a buy because of that fact, because they're not growing efficiently enough in an environment that's extremely competitive, in an environment where interest rates are now over, 4.5%, where you can invest your money elsewhere and earn 4.5%. It's becoming increasingly important for companies like NIO to demonstrate profitable expansion, which they haven't done. And that's what investors, I think, are really waiting for from NIO. Hopefully, 2025 will bring better news for NIO investors on that front. Now, looking at the company's balance sheet, it's in okay shape. It has $3.4 billion in cash and equivalents, and it does have other short-term investments, and it only has $3 billion in long-term debt. So it has more cash than long-term debt, and the company's been able to raise money when it's needed to, backed by its strategic investors. They've been willing to keep giving the company billions of dollars and allow the company more time to develop the business, give them more time to grow to a scale that generates sustainable profitability. Something unique about NIO is that it, instead of doing the battery recharging, it has a battery replacement idea. And so that makes it faster for folks to get going again after their battery gets depleted. They can go in, get the battery replaced rather than recharged. And people don't have to buy the battery when they're buying a NIO. They can rent the battery, something NIO calls battery as a service. So it's a unique business model, a little bit different from the other electric vehicle companies that are doing things differently. And it could appeal to a certain segment of buyers in the car industry, which NIO has demonstrated. There are people that are willing to buy its cars. It's already sold so many cars, and it is demonstrating growth in sales of vehicles. So given that stock price decrease, NIO is trading at close to its cheapest valuation it's traded for. Going back 3 years, it's now trading at a forward price to sales of 0.683. That's down about 90%, over 90%. In 2022, was trading at a forward price to sales of over 6. Now, I had been saying the price should never have been trading at such high valuations. I had been cautioning investors that while it is an exciting company, the valuation did not make sense at those premium levels. The company had not demonstrated enough progress on profitability, on cash flow to warrant such high valuations. But I know there's been many YouTubers that have been hyping up this stock without really understanding financials, without really understanding investments. These were people that should not really be talking about stocks in general, but they were. And unfortunately, many people had listened to their recommendations and lost a lot of money on this investment. It's not very prudent uh, recommendations that they were making, looking at things that were irrelevant to the business prospects longer term. So, in summary, do I think 2025 is the year that NIO stock is a buy? Maybe, but not yet. At current prices, I don't think NIO stock is a buy. I'm keeping the stock rated as a hold for now. However, I wouldn't be surprised if in the middle of the year, if they demonstrate more progress, if I see accelerating growth in the Envo brand, and I see developments of the new Firefly brand, and all of that starts to come together and really improve prospects for the company, I wouldn't be surprised if I change this recommendation at some point in the year. But as of right now, at current prices, I'm still keeping the stock rated as a hold. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.